Welcome back. Those bellwether semi-stocks living up to their name as we see deep declines in NVIDIA and some others. That's sending today's sell-off in the NASDAQ 100 into the 500-plus point territory. Seema Modi has more in today's Tech Check. What gives, Seema?
Semiconductor sector as a whole, actually, worst day since July 17th. And even when you look at the NASDAQ 100, nearly 40% of the losses for the NASDAQ 100 are coming from the semiconductor stock. So clearly these chip names are getting caught up in what's happening today. One data point investors are chewing on is Google's CapEx, how much it's spending on technical infrastructure and chips. The fact that the hyperscaler did not change its spending targets for the year is raising some questions as to whether Meta, Amazon, Microsoft will do the same. Goldman Sachs and Sequoia have both warned in recent weeks that bigger CapEx budgets may not be justified, and that is a potential headwind for the chip makers that rely on that spend. NVIDIA, which sells its chips to all the hyperscalers, you'll see that stock is down about 5% right now. Its competitor, AMD, down a similar amount. Broadcom, which is working with Google to develop its own in-house chip, is seeing its stock fall by over 6%. And then in the analog space, Texas Instruments is holding on to some gains here after reporting better than expected second quarter earnings. On the call, CEO Haviv Alan said its U.S. operations makes it a geopolitical winner. 75% of its business is based here in the U.S. So one stock here holding up. Earnings, of course, will play a more important role in understanding how strong the demand story. Tonight, equipment player KLA-Tencor will report, and Citi points to its strong China exposure actually as a tailwind, though recognizes the comments made by former President Donald Trump as a potential risk. So we'll look for those results tonight, guys.
It's hard to imagine in a world where the CapEx budget that was reported by Alphabet is somehow going to be not good enough or, in some ways not robust enough to carry this trade all the way through. Just how much do these hyperscalers, these industrial level type spenders on IT, how much do they have to spend to make the chip trade better or more attractive or keep the momentum going higher?
Well, it's all about context, right? These companies in the chip space have run up so far, so fast on the prospect of more spending by hyperscalers. So any sign that they're either pulling back or being a bit more conservative on CapEx going forward is being seen as a potential headwind for these companies.
All right. Seema Modi with the latest on chips. Thank you very much.